The giant whale dumped the scumbag, and the retail investors became the bag holders? The more it falls, the more you buy. The funding rate is positive. Is Bitcoin a market shakeout or a crash? Cook was fired, and Mr. Bao stabilized the situation. Is the September FOMO test coming? Stocks of the world's largest Ethereum stock are soaring 585%. Is BitMine, this hack dog, really going to rewrite the market landscape? The new generation wants to change the game while the old generation is clinging to their position. Who will have the last laugh in the tokenized stock market? Pushing USDC, pulling Lust. SBI partners with Chainlink to define the new stablecoin landscape in Japan?
Tuesday, August 26th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Bitcoin surged to $124,000 before crashing back down. The market is now fixated on the $105,000 barrier. The performance of on-chain wallets is intriguing. Novice wallets holding 0 to 0.1 Bitcoin distributed their holdings at high levels and then entered the market at low levels, typical of price-chasing professionals. Small and medium-sized investors holding 0.1 to 10 BTC have been persistently increasing their holdings, effectively building a protective barrier at the bottom. Mid-tier investors holding 10 to 1,000 BTC have been volatile, buying and selling like a scumbag, and market stability depends entirely on their behavior. Large investors holding 1,000 to 10,000 BTC have been frantically dumping their holdings at historical highs, driving this correction. While whales holding over 10,000 BTC haven't been selling as aggressively as before, they remain net sellers, creating a ceiling for price increases. The current trend is more like a market shakeout than a full-blown crash. If $105,000 holds, the market could surge higher. If it falls below, the market is in for a nasty shock. This wave of Bitcoin volatility is actually a typical healthy reshuffle. On-chain data shows that new investors who have been in the market for less than a month have an average floating loss of negative 3.5%, and they are frightened to sell their stocks quickly. The supply has dropped significantly, which is a typical fear capitulation. However, short-term funds held for 1 to 6 months still have a steady profit of plus 4.5%, indicating that the real chips have not been loosened. At the same time, long-term holders LTH. Instead, the more the market falls, the more excited it becomes. Supply continues to rise and investors are buying at low prices, absorbing all the selling pressure. This isn't a market collapse, but rather a proactive cleanup of high-level speculation and leverage, transferring chips to those with lower costs and stronger conviction. While it may seem like a roller coaster ride in the short term, it's laying the foundation in the long term, ensuring a more stable bull market. Bitcoin's recent drop to $110,200 may appear to be a price drop, but market sentiment is actually quite positive. Funding rates have remained consistently positive, prompting bulls to hold on to their positions at all costs. Even more striking, as the price plummeted, funding rates actually surged. A textbook example of the more the price drops, the more you buy. The market is currently fluctuating between $110,000 and $120,000, a clear sign of leverage liquidation and profit-taking. Whenever the price approaches $110,000, funds immediately rush in to buy the bottom, maintaining a remarkably strong support. While the market will certainly be subject to some short-term macroeconomic headwinds, such as rising US Treasury yields and a stronger US dollar, on-chain funds haven't fled. Instead, they appear to be quietly recharging. This apparent volatility is actually a result of turnover. Once weak hands are eliminated, the market can gather momentum for a further upward move. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within 24 hours. Click the bell to join our channel and become a member to receive your membership code Monday through Friday. Trump has really gone all out this time, firing Federal Reserve Governor Tim Cook. But here's the problem. The Federal Reserve Act of 1913 clearly states that the president can only fire a governor for good cause, but what exactly good cause means is completely unclear. If this case reaches the Supreme Court, it will be a drama of the century. If Trump wins, he'll be able to install his own people on the Board of Governors, potentially turning the Federal Reserve into the Trump Reserve. Even more exciting, the market is already betting that the next person to be hit will most likely be Mr. Powell. Lately, everyone's been arguing about whether he'll cut interest rates, but now the drama isn't over yet and the saga is about to escalate.
Federal Reserve Chairman Jerome Powell stated in Jackson Hole that the U.S. job market is slowing. Monthly job creation is averaging only 35,000, lower than the 168,000 projected in 2024. The unemployment rate remained at 4.2% in July. He suggested that tariffs could bring a one-off inflationary shock and emphasized that policy is data-dependent. He suggested a cautious rate cut in September, but would not commit to one in advance.
To proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
CICC research report notes that while Powell's speech was interpreted by the market as dovish, he did not provide a clear path for rate cuts, emphasizing only that policy will depend on economic data. Meanwhile, several investment banks, including Barclays and Deutsche Bank, have already raised their expectations for rate cuts. The CME FedWatch tool indicates that the probability of a September rate cut has risen to approximately 87%.
Powell is remarkably steady this time. Before he even spoke, the new Fed news agency published a short essay entirely devoid of economics, focusing solely on his daily life. 72-year-old Powell swims 3 times a week with a private trainer, maintaining a rock-solid mindset. Colleagues say he's all about doing the right thing, completely oblivious to the market's constant bullish and bearish rhetoric. The point is simple: don't expect him to be swayed by market sentiment. Don't forget, September is packed with excitement, with Trump's upcoming WLFI DeFi project and the Tether-backed Plasma public blockchain raising $373 million. If these truly trigger a wave of collective FOMO and a heated market, you'd be wise to be cautious and avoid diving in headfirst and getting caught up in the excitement. BitMine is simply on fire. Before June, it was a small mining company that no one paid attention to. Suddenly, it stopped mining Bitcoin and directly announced that it would buy 5% of the world's ethereum, instantly becoming the top stream in the stock market. In the past month, it has issued announcements almost every week, buying again and still buying. Last night, it swallowed up 190,000 ethereum, firmly establishing itself as the world's largest ethereum treasury. Even more outrageous is that it has now become the world's second-largest cryptocurrency reserve company, second only to the Bitcoin hoarding king. Michael Saylor's strategy netizens couldn't help but joke that one was guarding the door to Bitcoin, while the other was clinging to Ethereum, and the cryptocurrency world finally had a two-horse race.
BitMine's cryptocurrency and cash holdings increased by $2.2 billion last week, reaching 1.71 million Ethereum, with a net asset value of $8.8 billion. Chairman Tom Lee stated that the company leads its peers thanks to its growth in per-share cryptocurrency net asset value and stock liquidity, with its M/NAV ratio at a low of just 1.24.
I'm still a big fan of Bitcoin because I think it is, digital gold. But what we've seen in the last, really in 2025, is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum.
BitMine has undoubtedly been the luckiest hack in the US stock market and cryptocurrency circles this year. Its stock price has skyrocketed, increasing by 585% this year alone, and its BMNR market capitalization is poised to break $10 billion. Even more impressive, its holdings of Ethereum have already surpassed the world's largest, propelling it from a mining obscure to a chain treasury giant. The company is no longer content with mining alone, positioning itself as a crypto version of BlackRock, leveraging on-chain asset management and reserve strategies. To put it bluntly, it is testing the waters of an unprecedented market experiment. Can listed companies consider cryptocurrencies as a core asset on their core balance sheets? If this path proves successful, BitMine will not only revitalize itself, but it could also trigger a wave of imitators, with more listed companies eyeing Ethereum and Bitcoin as their primary assets, truly rewriting the landscape of the capital market.
The US SEC is lighting a fire with one hand and pouring water with the other. Will tokenization soar or fall? SBI and Chainlink partner to explore stablecoins for direct on-chain audits.
Tokenized stocks have been incredibly popular recently. Put simply, they're essentially traditional stocks moved to the blockchain. Their total market capitalization has just surpassed $26 billion, making them a relatively small market cap. However, thanks to the collective entry of major platforms like Coinbase, Kraken, and Robinhood, they become a hot topic. Their main selling point is even more enticing: 24/7 trading and access to stocks unavailable on the traditional stock market. However, just as they emerged, they were met with a chilling response from international regulators, ESMA and IOSCO. Netizens were amused. Tokenized stocks haven't even learned to run, and they've already been dragged down the compliance runway.
Data shows that the total value of tokenized assets has exceeded $26 billion, of which the market size of tokenized stocks will reach $360 billion in 2025, with an annual growth rate of 26.6%. If only 1% of the global stock market is tokenized, the potential size will be as high as $1.3 trillion. European Securities and Markets Authority ESMA, IOSCO World Federation of Exchanges WFE, recently sent a letter to the United States. The SEC has called for tighter regulation of tokenized stocks, arguing that they lack voting rights and legal protections and could mislead retail investors.
Fundamentally, the problem that we're trying to solve is allowing users, customers, investors to get on-chain exposure to equities where they don't normally have direct access to these equities. So as part of our mission, certainly at Kraken, to try and expand financial inclusion worldwide.
The SEC has already issued a stern warning stating that tokenization, no matter how popular it becomes, is still a security and must be subject to the rules. The problem, however, is that internal squabbling has already begun. In July, Chairman Paul Atkins excitedly declared, "Tokenization can save the US economy." Commissioner Hester Pierce immediately poured cold water on this claim, saying, "Don't get too excited. Securities laws must remain in place." The market was stunned by this response, wondering if it was time to step on the gas or slam on the brakes. We've all seen how the old guard in finance protect their jobs. For example, during the initial review of the Genius stablecoin bill, banking groups lobbied furiously to force a clause into the bill, stating stablecoin issuers cannot pay interest. The current situation is essentially a case of the new guard trying to change the rules, while the old guard refuses to budge. It's hard to say who will prevail in the end. Japan is truly entering the crypto market. The previous 55% tax on crypto gains was a virtual go-away that drove investors away. Now, with the announcement of a 20% reduction directly in line with stock market tax rates, investors are instantly delighted. The Financial Services Agency also plans to approve a yen stablecoin as early as next month and incorporate crypto assets into the securities regulatory framework, clearly waving to the market, "Come on, we welcome you." Even more exciting, SBI Group has been at the forefront, first embracing Circle Internet Group and Ripple Labs, and now hooking up with its old friend Chainlink. This combination of forces has left the market stunned. It seems SBI's subtext is Japan not only wants to enter the crypto market, but also wants to become a major player.
SBI Group announced a partnership with Chainlink, focusing on the Japanese and Asia-Pacific markets. The two parties will promote real-world assets. RWA cross-chain tokenization will enable free circulation of bonds on the chain, and Chainlink technology will be used to verify stablecoin reserves to improve transparency and security. At the same time, data feed tools will be used to tokenize the net asset value of the fund. NAV introducing it on-chain can provide investors with more accurate information.
What we do is enable something called smart contracts. Smart contracts are the more advanced version of Bitcoin's technology that applies the highly reliable financial products approach of Bitcoin and other blockchain systems to the global financial markets, to insurance, to trade finance, to eliminating fraud from gaming, to fixing fraud issues in ad networks.
SBI Group is going all in on this wave. Besides clinging to Chainlink, it's also promoting Circle's USDC and Ripple's RLUSD stablecoins, seemingly planting two flags in the stablecoin world. Even more impressively, it's partnered with Startail to launch an on-chain exchange, focusing on tokenized stocks and RWAs, with the goal of enabling 24/7 trading. Imagine the fusion of traditional finance and blockchain, with costs slashed by half and efficiency maximized. Coupled with transparent and public reserves, investors will undoubtedly become more aggressive in going all in. Netizens are laughing, saying this isn't a strategic move. It's SBI crowning itself as Japan's new crypto finance hegemon.
Even Nick Timiraos, the Federal Reserve mouthpiece, couldn't stand it anymore. Trump's move to remove Cook is nothing more than a blatant extortion tactic. His goal is simple. If they don't cut interest rates, he'll show them some color. The US SEC has hit the delay button again, postponing both Canarias Pengu Spot ETF and Grayscale's Cardano Spot ETF. The market is reeling from the uncertainty of whether or not to approve them, leaving them waiting in vain. DFDV, the SOL Treasury company, has stepped up its game again, securing $125 million in equity financing at $12.50 per share. With its coffers bulging, DFDV's buying spree is expected to intensify. MicroStrategy, a major Bitcoin fan, has increased its holdings. From August 18th to 24th, it spent $356.9 million to acquire 3,081 Bitcoins. Netizens joke that this wasn't just bottom fishing, it was buying the entire market. The blockchain hot list is out. Solana holds the top spot with 21.18 million active addresses over the past 7 days, followed by BNB Chain with 10.9 million. Tron and Base each have over 6 million, while Say surprisingly enters the top 5 with 4.96 million. Netizens jokingly say the cryptocurrency world is all about traffic.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the Member Wealth Code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.